All right, thanks for joining me for today's webinar. So we're going to go over a couple different things today, and I'll kind of just give you the structure for what we're going to talk about over the next hour. Doing something a little bit different. I don't normally do midday webinars. I don't do a lot of aftermarket webinars. We do so much during the day, and I work a lot on the weekends too, doing research, and at nights as well. I try to really spend my nights doing research, so I really don't do a lot of webinars. So I'm going to try to do them a little bit more often during the day. Sometimes we get a little bit of a lull right now in the option activity and the trading. So I'm going to try to do a little bit more of them this time, so I can continue to do my research at nights and on the weekends, which I really enjoy doing. So we're going to talk a little bit about my plan, how I use option activity, and a little bit about my trading plan and my system. And then we're going to talk about some of the things that we do every day at Tribeca Trade Group, and including the newsletter. We do a new weekend newsletter where I really try to get traders prepared for the week, really look at some of the big macro themes. And then we also have another newsletter that's for single name stocks. So that's basically how my trading strategy is. I try to look at the overall trend, the overall themes that are going on, and then we kind of drill down from those major themes or those macro themes, and look at single name stocks, and look at what's moving there, and look at option activity. So that's going to be the structure of this webinar. We'll probably go an hour, maybe a little bit longer, depending. I want you guys to be able to ask questions. I want this to be as interactive as possible so that you guys learn. I feel like more times that people are asking questions, you're learning. Oh, thank you. Thanks very much. Yeah, new logo, new company logo. Uh, really nice. I like it. You always you have to design something that you really like. But anyway, so let me go through, and the risk disclaimer is up in front of you. Basically, everything that you hear today is for information purposes, not giving any recommendations or anything like that today. It's all information only today. So that's it. And I'm not even going to keep like the whole PowerPoint presentation open, because I flip back and forth between screens. So if we do actually see, I want to make sure if we see any big option trades hit the tape, I want to be aware of them, and not completely ignore the tape right now. So a little bit of multitasking for these midday webinars. But so here's my background. I've been trading for a long time. I've held various different roles at different banks. Was a senior ETF trader, senior trader on Merrill Lynch's Delta One desk. It's Merrill Lynch Bank of America. So really kind of suits my strategy, and what I've talked about so far is kind of looking at the macro theme. The beauty about ETFs is that they let you get into every nook and cranny of the market. I'm not going to go into the whole passive versus active discussion, but I really view ETFs not as passive. They allow me actively to get into things like Europe, FX, commodities, any area around the globe. I'm in Indonesia ETFs. I'm in emerging market ETFs. That's not passive. That's allowing me to get into areas of the market actively, and actively trade those. So that's why have always loved the product of ETFs, because they can allow the retail investor to get into things that they couldn't get into, that only an institutional trader or investor could get into years ago. Nowadays, you can get into every part of the market. So that's basically why I like ETFs so much. And then they also allow me to kind of pick up trends. That's where the big money has been going lately, for money management. So I can really pick up on trends like, money going into robotic stocks, money going into European equities, money going into healthcare. Things are international healthcare, which I saw this weekend, or last week's fund flow data kind of gave me some good ideas in that space. But that's it. That's pretty much my background. So I'm going to spend. And I've got, I threw in this if anybody takes note. That's where I started trading, was in fifth grade. It's like a little bit of a joke, but it's true. I started trading very young. President of my fifth grade baseball card trading club. So anyway, I think that's funny. My Twitter handle is at @cfromhertz. You can follow me there. I put out a lot of, the big. I don't put out every trade that hits the tape. I try to really only put out. I'm not one of these people who put out every little trade that hits the tape. I like to really focus on the significant ones and the themes that are going on in a particular day. I do a midday summary and end of day option summary with all the trades on them, but I'm really looking for trades that, number one, are aggressive in nature, but really kind of fit a profile. So I'll talk a little bit about that. So just give me 1 second while I clear my throat. So I don't need to go to the week review. So what we want to talk about is aggressive option activity. And so let me give you a little bit of a history. So again, I'm going to spend about 10 minutes on this, and please, by all means, ask away any questions about how I use this as I go through, and then I've got a whole 18 different stocks that we can kind of talk through and kind of give you some ideas about some of the activity and why I kind of put this summary together. Looks like they're buying a little bit of GE puts on the tape right now, but. So with any aggressive option activity, or with any trade, right? With any way that you are trading, full time or part time, you should always have a trading plan and you should have a system. So that is above everything else, above the looking at option activity, because it's not really going to help you. And I think it's going to be much harder, especially for a new trader, or I would say an experienced trader, to just take trades and not really have any type of plan. Meaning, what type of trades are you going to take? What's your duration in the type of trades you're going to take? And where are you looking for the stock to go to? Which on options you kind of have to define a little bit. When you're just in stock or in a trend portfolio, you don't necessarily have to kind of set targets for something that you're in long term, but for options, you kind of have to think about where you want to take the trade off and where you think the stock is going, because you only have a limited amount of time. And that time is going to be based on what contract you pick. It could be a monthly contract, could be a leap, could be something as close as weekly. So you have to have all these things kind of planned out in your head beforehand. And then you also have to think about one of the most important things is losses. You have to, with every long-term trading plan, it's impossible not to have trades that are not going to work. You just have to be able to manage them, and not you don't want to do the opposite of what you should be doing. You should be letting your winners run, and you should be getting rid of losses and getting rid of them quickly. So basically every trade, and how I've kind of made my plan over the years, is realizing when trades are not working, get out of them. You could always get back in, especially with the way technology has gotten so much better the last couple of years. I actually shot a video about this week where I was talking about how I got long in a cash trade, and I used my rules. I got out on a stop on the 200-day moving average, which is fine, because once it breaks the 200-day moving average, it's usually not in an uptrend anymore. But however, there's also whipsaw moves. So great to be disciplined and get out of your trade at the 200-day moving average, but also come right back and send an alert. Don't get angry because you had to take a loss. Say, okay, well, maybe this stock is going to have a whipsaw move. I did this. The example that I used this weekend was Juno. Juno, I got long in a cash trade, because we do manage cash trades here. We do have a trend portfolio, but you can see what Juno has been doing. But I got into Juno, I think it was here on the break of the 200-day moving average, and it broke down. So hey, that's my rule, and I have a lot of confidence in my trading system and my plan. Much more confidence in my plan than over any individual one pick. So the part where I did not do a good job at managing this situation is I got out of the trade here on the break of the 200-day moving average, just as I said on the entry. So that was defined, but I didn't set an alert when the stock got back over the 200-day moving average. And you could see what the stock has done since. So these are the things that you have to do. And everybody makes mistakes as traders. So by me not putting an alert or forgetting to put an alert on Juno, I missed out at good profits. But this plan and being disciplined like this, I think you really have to pay attention to whether or not you're trading options, stock, whatever it is, Forex. So by not having that plan and not managing your trades, we see some Goldman actually just hit right now. But by not doing that, you're not allowing yourself to, you're not setting yourself up for success in this game. So the more disciplined you could be, the more defined that you have your trading plan and write these rules down, the better off you're going to be. So that's just the first bullet. I spent a little bit more time because I think that's the most important thing. So how do I use option activity? So a lot of people call it unusual option activity. I'm not looking for that. I'm looking for aggressive call activity. I'm looking for things that we do. Part of what we do at Tribeca Trade Group is we do a lot of studying. We do a lot of studying of charts. So I'll look at a particular group and I'll say, okay, this group's been in an uptrend for a while, but it's had a pullback. So I'm looking for, and that's been what we've seen a lot the last couple months, right? Most stocks, the majority of stocks are in uptrends, but you really have to be cognizant of those uptrends and not buy on the absolute high. Looking for pullbacks is essentially what we do here. And one of the names that I got into last week, I don't know why this isn't consistent, but there was a real nice trade last week in SPGI, and it's just always good to kind of show an example of what I mean. But you can see that this has been in a nice uptrend. This name is, they manage, they're one of the index providers for ETFs. So a really nice area, going into, obviously what my background is and what I, really enjoy is trading with ETFs. Stata tender offer from Bain. Sinvin falls to meet target. So a big headline coming out there. But, these trends, just like MSCI, right? MSCI is another stock that has just continued to go up. Why do they continue to go up? Because they get money, they get licensing fees from State Street, from iShares, all the big ETF providers. So a little bit of a story behind this one. So I'm familiar with the name SPGI. I've never seen option activity in it before, but if we kind of drill in and look at a closer looking chart, and we look at a daily chart, you can see it does have some support. So on my charts, I've got a bunch of different indicators, and you should always, the things that are on your charts, you should always be using actively. If you just have things on your charts and you're not using them, probably not the best thing. But any indicator that I've got on my charts, I use. So one of the things that I look at is the shorter term moving average. I look at the long term moving average, the 50, the 100, and the 200. But I also look at shorter ones for seeing, especially names that are in uptrends that may have been pulling back a little bit. So you can see this stock, S&P Global. Again, what do? They manage indices, and they get licensing fees from ETF providers. So this name has actually just reached a 52-week high at 150, and it's kind of pulled back a little bit, but it's fallen right into support. So when we see this trade that went up last week, there's 2,800 of these. I'm looking to see if it was bought aggressively, which you could see that the price went up above the ask. So it was an aggressive buyer. They went up above the ask. You could see sweep opening on it. So they swept all the exchanges, and it's an opening trade, right? So this kind of makes sense, going back to what I'm looking for, which I think I have in here someplace if I don't, but I'm looking for the most aggressive trades, right? That kind of takes some of the guessing out of the situation. If somebody is buying something and they're going above the ask, that's much harder to disguise, right? When I used to make markets for hedge funds and when I was an ETF market maker, a lot of the times I tried to disguise the trade. Especially if a hedge fund had a really large order to do, they would tell me, "Hey, try not print it. Try to print the whole trade as one block. Try to print it mid market so it doesn't look like because I may have more behind." But if somebody is going above the ask, they've got an axe, right? They've got an axe to get in this name, to get in the name quickly, and they like the price. So we haven't really seen a follow-up buyer in it, but we never really know when a subsequent buyer or a repeat buyer is going to happen. But certainly we could see from this particular trade that it was aggressive, bought above the ask, it was swept. And we could see the size of it was decent too for a name that we normally don't see a lot of activity in. A $500,000 trade is pretty good. And they also went out a little bit farther. So they didn't just go into the weekly stuff. They went out not this month's expiration, but next month's expiration. So my thought process is I take a look at the chart. Once I see that activity, I'll say, does this, I'll look to see if it fits my trading plan. In this sense, it's just like I talked about. It's one of my favorite things right now is buying stocks that are in an uptrend that have seen a pullback. So that was uh, this was on Friday. So this was this candle here. So a nice bounce into support. So do I know that this trade is eventually going to work? No, I don't. So I need to formulate my own plan because no one's going to tap me on the shoulder. Right, so this was a great idea. This is something that I like. I like the technical setup, but they're not gonna. I don't know the motivation of why they bought that. I don't know if next day later they're going to sell stock against it. So I need to come up with my own plan now at this point because they're not going to tap me on the shoulder and say, "Hey, we're going to sell some shares against it to hedge." Or we're going to get out of this position, or I don't know what their whole portfolio is. So I got the signal. It's a trade idea, and now you have to come up with what you think is going to happen, and where it's going to work for you, and where it's not going to work for you. So a lot of the times, what I do is I go back to PowerPoint. I don't have to follow exactly what they're doing. If it's extremely a liquid name, and there is some advantages to trading the same thing that is the trade that we see on the tape. The market. What platform am I using? So Trade Alert and Bloomberg are the two platforms that I use, Fred. So there will be more liquidity. The market maker is going to pay more attention to where the open interest is at. But it doesn't necessarily mean, especially for names that are not the most liquid names, I can pick any other expiration that I want to. I could pick something that fits my trading style. So in this sense, I didn't really want to pay over $2 for this option. So what I did was I made this into a call spread. So which I've been doing with a lot of names that also, you notice what happens sometimes when we see trades that hit the tape is the implied volatility shoots up. And then when nothing happens in the name, the implied volatility comes down, and the value of the premium will come down a bit because part of the component about the pricing in the option is implied volatility. So some names which I think are expensive or names that have a high volatility, what I'll do is I'll turn into a call spread. So I start to think about where could this stock go to in the next couple months. So I looked at 150, which is what they bought, which is basically the high that it was a couple days ago. And then I'll start to look and say, okay, well, where do I think it could go in the next couple months? And I picked the 155 strike, right? I mean, this name's in a nice uptrend, but it's certainly not a big momentum name. It kind of grinds higher. So I turned this trade into a call spread, and I think I bought this for right around $1.55. So it's trailing a little bit under where my cost basis is. And then also what I do is, I don't always, sometimes I leg into a position. Like I'll start a position, but if this thing falls a little bit further and retests this blue line, I may want to add to the position, right? So I'm leaving myself room where I could possibly get into the trade a little bit cheaper than what this investor trader paid for it. Also, I want to know where's this trade not going to work for me, right? So it's been in a nice uptrend, but we never know how long the uptrend is going to last. So immediately, what I'll also do on the trade entry is I'll put an alert and we'll say basically where's this trade not going to work if it starts to break this trend, right? So that's part of the reason why I like this trade or this stock is because it's been in a really nice uptrend. It's only really come in here, since it broke the 200-day moving average, which is this white line on my chart. It's been up and away, and it's come in and it's tested the 20 period moving average, but it really hasn't broken it too far. So I set my alert a little bit below the 20 period moving average. That's when I know something's not right. Plus, I could always, if it does break down, I could always get out of it, and maybe come back and it comes back and tests the 50-day moving average, right? These are all possibilities, but you have to stay on top of it. Because again, they're not going to tell you that the trade's not working and like, oh geez, something's changed and the reason why they got into the trade, right? They're also not going to explain to you. Like I get this, I see this question a lot when people who are using aggressive option activity, they will almost think that the person who traded it is always correct, right? They're not going to be always correct. So you have to take these trades with a grain of salt. We certainly, an example of this, which is really, really, so having this trading plan, we could look at any energy name, but we've seen a hell of a lot of energy call buying over the last couple months. Names like Whiting, names like Weatherford, names like, there's just been Devon Energy, Neighbors. None of them have worked other than maybe for a day trade. So just because it's aggressive and it's interesting, it doesn't necessarily mean the trade is going to work. So all these trades, I've said, listen, I'm not going to trade these names if the stock is below the, I don't care how aggressive it is. I don't care how many times they come in. If it's underneath the 200-day moving average, so that's my trading plan, right? You have to have your own trading plan. Why not sell puts? Sure. Why not sell a put spread instead of call spread? For absolutely, you could definitely do that. So, and that's a great point. So, what the trade that I pick, you could pick any other trade that could also work very nicely, and you could actually do a risk reversal. You could buy a call spread or not a risk reversal will be buying calls and selling puts, but you could buy, I think it's called the double vertical. You could buy a call spread and you could sell a put spread. So that's also another great way to structure a trade. And these are all things that you could do. You don't. So the whole point of me bringing this up is you don't have to do exactly what they're doing. But I'm sure as hell not going to take a name just because it went up on the tape and it was aggressive. Because keep in mind, the people who are the most likely, some of the trades that are going up are being executed by hedge funds. Sometimes they have information, sometimes they don't. Sometimes they have better information than us. Sometimes they are doing a trade for other reasons. But if you look at the downtrend that all these energy names are in, and we saw a couple energy buys today. It doesn't fit my trading plan. It's for me, I don't want to trade these names that are in a downtrend. Sometimes you could set your own. That doesn't mean that you have to do that. You could set things like, hey, I'm going to go long energy versus the recent low. As long as you're putting some type of rule in place. My rule is I'm not going to trade this stuff. I'm not going to trade any energy names, and I may be missing out. Because if they do rally, they've got a long way to go to get to the 200-day moving average. But it's just not what I'm looking to do right now. Every once in a while, I will trade a counter trend trade. This trade was probably one of the worst looking charts you could look at. This is MT. There was a big aggressive repeat call buyer that happened on Friday. If you want to participate in some of this stuff, my rule says, because first of all, this is again probably one of the most ugly charts that you could probably put together. Why? Because if I zoom in here, you've got the 50-day moving average crossing below the 200. That's a sell signal. You've got the price below the 200-day moving average. You've actually have a bearish channel here. However, they went up. They went in several times. So, as long as you kind of set these rules up ahead of time, you could say, hey, they bought 18,000 of these weeklies for 35 cents. Maybe your trading plan says, hey, I could take something that's in a downtrend, but I'm going to take, maybe 20% of my normal trade size for something like that. Or you're okay with losing 35 cents for something. So again, my point is that you could do a lot of different things where you can kind of limit your risk and take a variety of trades, but define them ahead of time. So this way that you know what you're getting yourself into rather than after the fact. Do I ever use directional flies, and if so, what conditions are best for this? Well, it's not really. I'm not going to get into. The subject of the matter is aggressive call activity and last week's call activity. So that's more of every once in a while I will use call flies and put flies mostly for earnings trades. Um, so I do use those for earnings trades when we could look at like an implied move for an earnings move. But I generally don't use put flies and call flies. It's just not one of my favorite trades to do. Yeah, you save a lot of money by not trading. So some of these things. Uh, so the other thing, and I've kind of alluded to this a little bit here, but if you haven't been able to figure it out, I'm really using a trend trading methodology. It's kind of a hybrid of that to trade aggressive activity, right? I'm looking for things that where the trend is up, or the same side. If a trend is down, I'll buy puts. I have no problem with buying puts on energy names. I really haven't done that much. I will say this: the unusual or aggressive option activity has kind of kept me out of shorting because we've seen so much. Other than in the ETFs where we've seen XOP and some XLE, and we did see a big put buyer in Exxon about a month ago. But we've also seen a lot of call activity. So I really haven't taken a lot of puts in the energy names, even though they're in downtrends, because I'm looking for several things to agree. So if I see a lot of bullish activity, I really don't want to short something. So you kind of use a couple different factors here. The other thing I'm going to talk about, and I've already gone about a half hour, so I'm further than I wanted to spend on this, but these are important things to kind of go through before we even touch upon what trades I'm looking at. I'll just say this, with these trades, try to be consistent. Sometimes we see really big trades that hit the tape, and you're like, oh, I'm going to double up on this one, right? For me, I like to almost use the same amount of dollar amount for each trade. If I think something is really looks like a, a good looking trade, maybe I'll take 10% more than I usually do, or 15% more. Or if something is kind of borderline, maybe I'll take 20% less than the normal trade. That's my bands, but for the most part, just like I always use baseball analogies, but just like a hitter, right? A hitter will be very consistent. They know where their sweet spot is in the strike zone. Real good hitters, like one of my favorite players of all time. This is dating myself, but was Don Mattingly. Don Mattingly had certain places, and this guy just did nothing but practice all the time and perfect his. I was going to say perfect his trading, but perfecting his swing. And but these guys are consistent. When you get to the big leagues, they're not. A couple guys will swing harder than usual every once in a time, but the real good hitters, you look at their swing, they're doing the same thing over and over and over. So that's also, I think, it's an analogy that kind of spills over to trading and being consistent and not getting over the tips of your skis really kind of helps, because you never want to be in the situation where you've got 10 or 15 trades on, and you've got the one trade that is blowing you up, right? You could have, let's say out of your 15 picks, you've got, 8 of them that are making you money, and you've got one position that is offsetting all your gains, right? I mean, some of you I know have been there. I've been there. I've had a position sometimes where you have an outside position and it blows you up. It completely takes away from all your good trading because you thought this one was really gonna work, right? So these are things that I've learned to kind of these are things to kind of that I think help anyone in their trading plan, just being consistent. All right, so a couple trade ideas. I talked about the SPGI. Another one that we put together, and I do shoot videos on this stuff. I just started doing this, but the JD one, that was one that from last week that I structured as a call spread. Um, so that was in last week's newsletter. Where did this thing find support? Where we saw call buyers rush in several times was right on the 50-day moving average. Right? That's easy. Why is that easy? Because if it doesn't work, I know exactly where to abandon the trade on a break below the 50-day moving average. It didn't happen. We stayed with it for a couple days, and last week, we had 2 days last week where this thing really worked pretty well. So I took a target, I think, on Friday that was better than a double. I think I got into a call spread for $1.33, which I still have on. I'm still letting it run. Uh, but for JD.com, I got into the September 40. Again, we saw a lot of different activity, all different types of strikes and maturities. I found something that suited me. I went into a September 40-46 call spread for $1.33, and I took a target at $1.75 last week. So better than a double. So it worked. And again, I know where it wasn't going to work. If it broke the 50-day moving average, I would have gotten out for a small loss. At least I believe it would have been a small loss because it's a September position. All right, so that's enough. Any questions so far? So again, I always think I'm going to go cover these things in like 10 minutes, and it's difficult to to do. It really is. It's difficult to kind of talk about what you're looking at and what you're doing because it's not that simple, and it's something that I've built up over a couple of years. Where it's allowed me to outperform the market this year. Okay, so I came up with, so we already went over SPGI. So the rest of the webinar, I'm going to talk about some individual names and why I think they're interesting. So I send this out to all of Tribeca Trade Group subscribers. So again, number one, Tribeca Trade Group subscribers get, my market view, what I think is going on. I've talked a little bit about the VIX being extra low. I took some positions off on Friday because I thought that, I personally had a really nice week last week. I think the aggressive option activity was really good. Even for the S&P, the S&P's been flat for the last 3 weeks, but we're seeing all kinds of individual names and sectors separate. Like we did with biotech last week and solar names, for example, and then we saw names break down like energy. So there's a lot of cross currents going on inside the S&P. So I stick to where there's opportunities in this market, and I'll change. If we start to see the VIX like at a 20, well, let's say I usually say above 20, but now that we're at a 10 in VIX, I think you have to say at this point a 15 in the VIX, a 15 or 20. I'll change my trading plan. I won't be using so much individual names. I'll probably be trading the Qs more and things like IWM because those will be moving. But right now, while the VIX is low and while we're seeing some really good signals, some BlackBerry calls going up there being bought, it looks like. Interesting, a couple days after earnings. But so anyway, subscribers get my whole view. I talk about sectors. I talk about fund flows. I will highlight things going on in sectors where some money is being put to work. Saw some money going into international healthcare. Saw a lot of money being put to work in Japan. Starting to see some warning signs in consumer discretionary, so on and so forth. And then what I also do is I put together a list of individual names where we saw a lot of aggressive option activity, and I try to put together where I think the trade is interesting. So I already went over SPGI. Another name that we saw, that name that I've probably never seen any option activity in, is LXRX. They came in a couple times with this one. Total of 4,000 contracts, August 20 calls. So I took this trade. I have this trade on. I think this trade makes sense, especially if it can get over, what is this, 18 bucks. I don't think it's performing very well today. but kind of some off the radar names. So for this name, this name we don't have any support really close. So I think this one you have to watch since I don't really have any technical levels to kind of look at, maybe the 20-day, which is pretty far down here. What I do is I set like a stop alert, like a little bit less than where the my entry price is. Then I know that the trade is not working. It's not a hard stop. It's just something for me to say, okay, let me figure out what I want to do here. Is it falling into support, or is it, or does it look like the trade is not going to work? If the trade's not going to work, I'll take it off. If it looks like it may be falling into support, then I may want to add. But nevertheless, I'm setting an alert every time I enter into a trade. Very important. Another one that we saw, which again, a name that we don't see a lot of call activity, is MDRX. This one they came in a couple different times, and and bought calls. So this is, in the camp, I would say, of, like hospital names that really got a big bid last week. So this is another name that we saw both. I actually substituted my position today. I was in the July 13 calls. You can see 13 calls, 13,000 calls. It fits my trading plan. It just got above the 200-day moving average. Great. I, at this point, really don't want to be in a lot of short dated stuff. So I substituted out of the Julys and went into the Augusts today, as this name kind of trickled down a little bit today. Palo Alto. Haven't seen a ton of activity in this one either. Again, why I took this trade, because there's something that I can really kind of hang my hat on in terms of support. So they went after the September 140s, 150s. Actually, highlighted here with an arrow, but it kind of gets lost here. It's a big size trade, $1.4 million. So, which brings me up to my next point. Palo Alto is down today. Sometimes you can get into these trades. I liked where it was on Friday. I liked the recent break. Here was the earnings gap in Palo Alto. One earnings gap down. Then the last earnings big gap up, and it's actually went a little bit lower than that earnings gap. It didn't fill the gap and caught that 200-day moving average again. So I always go in, as I mentioned earlier, I always go into these trades with the ability to add to the position. So I added today. So if I can get in a little bit cheaper than what paper paid, and it's also, brings up a good point, which I haven't talked about that either, is some of these trades you just may not feel like it's the right day. Like Friday, for example, when technology was up big, you can kind of write these things down. I keep a journal and I say, okay, well, they bought Palo Alto calls. Here was the price that they bought them in. Let me see if the market ends up selling off or technology sells off a little bit, like the day that we got today, where this thing was down, I think well over 1% this morning. I went ahead and added to the position, right? So I always will leave myself the ability to kind of add to one of these trades, like usually up to from initial trade, then maybe add to it twice, right? So I never put a full trade on right off the start. I usually give myself some time, because if you've been trading option activity for a while, or watching option activity for a while, you can often get into some of these trades cheaper than what the traders who are trading them outright on the tape, right? So very important to keep that in mind. And that's also why I don't jump in 2 feet every time I see something really aggressive. I just always think that I could do better, right? You could do better. If you're picky, sometimes you can get better, but sometimes these things take off right from the start too. But I would say percentage time, like off the top of my head, probably about a third of the time they work out right on the onset of the trade. So for those other 2/3, you want to be able to, if you like the trade, if you like the technicals, be able to add at different levels. So that's what I did today in Palo Alto, but still very aggressive trade that went up. Questions so far? Covering a lot quick, I feel like, and a lot of subjects quick. Uh, and if I am going too fast for anybody, when we go through this in the trading room, we spend more, we go through with more detail, right? And that's the beauty. That's what I'm here for. Running Tribeca Trade Group is to help people out and to kind of help, beginners or even, guys who've been trading for a long time. I'll put my opinion about why I'm not going to take this trade right this second. Um, so I try to add value where I can. UNP, this is a rail name. I don't know what this is doing. I did not take this one. Again, you can't take every trade. There's no possible way. This name's down a little bit, but I think this was a nice aggressive trade. Ooh, look at that. There's a nice trade on the tape. Nice big trade in Broadcom. So this is why that kind of like light bulb in my head, because we've kind of been seeing trades like this last week. Since the semi group. So repeat AVGO calls. We've seen this trade a couple times now, little bits and pieces of this, like under 1,000 contracts, but look at the size. It's a nice $400,000 trade, July 235 calls. So I'll go through the exercise of what I normally do when I look at a trade, right? So we'll look at Broadcom. I'll look at the daily chart. I remember when this thing had earnings, great earnings, real nice uptrend. And it's having all of the semis are kind of having a really, I would say, weak day. We've seen some put activity. But so here's where I like this trade. Now, again, I'm not going to buy, I don't want to get into any more July options right now, especially for 510. So I would look at a call spread. And I would probably, so first things first, right? It's got support. So I know where the trade's not going to work. Since the trade had earnings, we all know this day, big sell-off in tech. And it's been grinding higher here, not with any big momentum. It's kind of just been sitting around. But right around this level, this is a value area, which I'm not going to go into what value areas are, but you got nice support at 241. So for Broadcom, they just reported, right? So they're not going to report till probably the end of August. So I always like to before I get into a trade, find out where the name reports earnings. Why? Because the options are going to be priced differently. So it doesn't report till August 31st. Perfect. I can look at an August call spread and I'll take a look and I'll say, well, where do I think this thing could go to? Probably I would think that, well, first of all, what did they buy? They bought the 245 calls, which are $3 out of the money. I don't want to spend that much, so I'll look for something maybe of the nature of 250, maybe 250, 260 call spread. Let's see what that price is. Let's see what the price is, because I actually have Broadcom in the presentation. Do, 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 do. Right? So I have good timings. Somebody did me a solid and put a nice Broadcom trade on the tape. So for August, again, I don't really want to deal with that short. It just doesn't. I don't want to put that much risk on right now for July. So unfortunately, there's only $10 wide strikes for August. I could also look at the August 4th. Sometimes the non-standard monthlies will have better. So maybe something like this. I'd rather go out and do the August call spread. But the strikes don't line up. I don't really want to do 250s because going to the chart. Sorry, bear with me. So 250s right. Well, actually, that might work. Let's see. Let me price it up. Let's see what the 250. Uh, why not a bull sold put spread in the money? Yeah, I mean these are all things that you could do. I like to do more call spreads than put spreads. But let me just see what this is pricing first. Sometimes I like to do a combination. I also like to use my judgment here, right? I mean, I I'm not going to sell a put spread here because there's too much volatility right now in the semi space. I'm starting to see a lot of put activity in some of the. And so if I saw all calls going across the tape, and I saw a lot of bullish activity in all the semis, uh, I would say, okay, I don't mind selling a put spread. But I'm seeing a lot of puts go up today, in the semi space, which has me a little bit concerned about the space. So when I'm a little bit concerned, I don't necessarily want to sell a put spread. I'd rather just capitalize if I'm right on the upside. All judgments to kind of think about. There's really no right or wrong. You know, you could do anything that you want to do. I feel like Ken Fisher. So you could. So I think this works. The 250 260 August call spread. You could buy the mark is around 320. So I'll start a position in here. Let me see if I can get around mid market. So you always want to think about what your reward is, right? So $10 wide call spread. My reward is $10 minus the premium. So I don't need to do that on calculator, but 680, right? So I can make at least, you know, almost 2 times my money. I could at least make a double on this. So that's the right risk to reward. What could I lose? I could lose 310. But I've got my defined support. If it breaks in here, I can get out of it, and I don't think I'll lose the whole 310, right? I'm not owning these things and saying, hey, I'm riding it no matter what. I'm making a judgment. So first thing I'm going to do, so I'm going to go a little bit above mid market, which is 330. And let's see if I get filled. I got filled. All right. So you can kind of see how the trading room works. So this doesn't belong here. So entry to open, and I copy and paste to save time. AVGO August 250 260 call spread. What did they give me here? They gave me 320. All right. So this is Slack. This is what we use for our chat room. I forgot to put starter position. And then what I do is I send it out as a text alert as well. So bear with me while I do that. All right. So great. I'm in the trade, right? I got filled. It is being recorded, Carol. Hello, Carol. So I also want to realize, where is this trade not going to work, right? Where is this trade? Because again, going back to what we've already talked about, I would be concerned if this thing starts to break value. So I'm going to zoom in here, and I'm going to say I don't want to be put the limit, my stop or my alert right at 240.56. Maybe a little bit lower here. Maybe below where we got to today, and I want to be alerted right around let's say 240.50. So in option house, I'm going to go ahead and put an alert. And right where I said, so less than. when I make a recording, everything stops working. So 241.5, right? That's what I said. All right, so I want to be alerted there. Less than, and then I know I have to make a decision. Right? That's not a hard limit. That's an alert I'm putting in my trading system that the trade is starting to not work. And then, hey, take a look at it. So that's basically a little glimpse behind my trading system. Again, I like the name. It's in an uptrend. Semis are weak today. So somebody's taking advantage of, kind of look at to see what's going on in this group. I know we saw a lot of puts last week in Intel. The only name that's really doing well, which we know Micron reports on Thursday, but Qorvo, both of the names where we saw big put. Funny that this is how it works. Both of the names where we saw a lot of put. So it's kind of, I would say, Apple suppliers, right? Skyworks and Qorvo. Big put buyer today in Skyworks. Big put buyer in Corvo today as well. $4.18. But just kind of fun, coincidence, right? Somebody went after these and puts pretty big, and they're kind of bringing down the whole group. The whole group looks weak today, which I'm a little bit worried about. Certainly don't want to see the whole semi group start to break down, but it's these two names, look, by far and away the names that we saw puts today that are bringing it down. All right. So any questions about that trade? I think I'm missing some questions. What is your winning loss? I guess that's losing losing ratio for your option trading. When will you decide to exit for profit 30, 50, 100%? Okay, so these are great questions. The more, someone just asked me this question last week in the trading room. The shorter term nature trade that I have on. So we talked about a couple of trades that we saw last week. We saw an MT weekly call buyer. The closer to expiration, really short term trades, I'm going to be very quick and mechanical with taking profit targets, right? So, I'm going to use probably 15 to 20% profit targets, something like that. I think in MT I used a little bit. I was a little bit wider than that. So it's going to be different for every situation. For a longer dated trade, I'm going to be a little bit more liberal with taking profit targets. So something like JD.com or even this Broadcom, right? So let's talk about the trade I just got into. Where am I going to take profits in this thing? I didn't even put out a target yet. Probably a little bit wider. I have a little bit more time with this trade. I wouldn't consider it a long-term trade. It's August, so we got a couple weeks till July expiration, and then a full month behind that. So probably with this one, I'm going to look at the chart and I'm going to say, where do I think the stock can get to, and then try to ballpark it from there. So I got into a 250, 260 call spread. So 250 is right up here. So I'm probably going to start put a limit out. I would say around 450. I got in for 320, so that's a lot bigger. So 450, a little bit arbitrary. That's a 40% profit target. So that's where I'm going to look first, and I could always bring it in closer. But again, I want this thing to really get to, and I do this a lot with Google call spreads and Amazon call spreads. I want to get this thing, and I don't want to just take 15% off. I want this. I want to make money, right? I want to let this thing try to work for me. So, if I chose 250, 260, I want to see the stock get at least to the recent high in a perfect world, right? So that's right around 256. So that's why, at least now, I don't want to. That's not the first target that I want to take, but I would like to see this thing be patient and see if it can get up there. So the first profit target I'm going to put out is 450. Give it a chance to let the stock go where you think it's going to go. So I just put that target out there. Does that make sense? Any questions about that? So it's like a different. So I don't have just one. For all the things that we're talking about, profit targets and something. I do have a formula for short term, like front month stuff, but for further trades, I want to let the trend work for me, right? I don't want to be that concerned with taking a 15% profit target on something that really trying to bake a double or triple on. Yeah, you got to be flexible, and don't be afraid to kind of think about where you think the stock can get going to. Now, it's not always going to work that way, but especially names that are in big uptrends. All right, so a couple more names. I think we're almost through the hour. I'm not going to go through. So this week, which I told subscribers this morning, I have 18 different stocks from last week, and when I started doing this, I really only wanted to do VIA V calls. That's the second time that we saw those today. That's another call buyer coming in. This one, and sometimes from experience. I've tried trading this one before. I haven't had the best success ratio with this one, so I'm going to stay away from this one. but I generally only want to put out probably about 8 to 10 stocks a week. But again, using Peter's word, I'm flexible. So if there's a lot more activity from last week, I've got 18 stocks in this report this week, just because the option activity I thought was really good last week, right? So I'm not going to limit myself. So we talked about most of these. We talked about UNP. Um, I talked a little. I didn't talk about Salesforce. Salesforce I have on here because Oracle had really good earnings. So really, this group just seems to be very strong. And we saw a couple different trades in Salesforce last week. And again, if you haven't figured this out by now, but a lot of the same themes are present in some of the names that I talked about. And why I'm featuring it is because it's kind of been an uptrend, and it's a little bit of a pullback. It hasn't recovered from the big tech sell-off. And again, you've got to find support in Salesforce. You know where the trade's not going to work out. And again, I can't stress that enough. If you've traded option activity before, you have got to make your own decisions and not just say, "Oh, well, somebody bought it. I'm going to stick in this trade." Right? Just that to me will lead to losses. I know somebody who, yeah, I'm not going to go off subject, but I know people have done that before, and I've seen them lose a lot of money. They're like, hey, well, there must be a reason why they bought so many calls. I'm sticking in this thing, and I'm going to add more and more and more. Wrong. That's how you blow up your account. So I put Home Depot in here. Home Depot looks like it's breaking down. There was a late call buyer in this thing on Friday. Somebody took a shot at this. So I have no position in Home Depot. I have it on my watch list to kind of watch. I don't think I have an alert in Home Depot. It's really not doing anything today. So this one may take time. So we talked about kind of using option activity to kind of alert you to watch some things. Um, so this is one I would say, this one, a big break of the 50-day moving average looks really dangerous to me, because this Home Depot is in a big uptrend, and it's held this 50-day moving average now since the end of last year. So I'm not really sure what to do with this thing yet. I'm really not. I think I came up with a level, um, which is using the hourly bar, and yeah, it hasn't even done, been able to base here. I'm almost like willing to let this thing maybe get back into value for like $3. So right now it's just a name that I'm watching. I just don't have I don't have anything to kind of grasp onto for support. I guess maybe the 100-day moving average. I think that's what I put in the newsletter. As long as you could define something, right? So it's kind of caught in the middle. Again, Home Depot is interesting to me because it just kind of got caught up in the retail sell-off. I don't know. Is Amazon going to get into home improvement? You know, when I guess I would be worried about Home Depot when you go to Amazon to pick up like plywood or something. But in any event, it broke the 50-day moving average. The problem is it's far from the 50-day moving average, and I would almost want to see it retake the 50-day moving average. So I think I'm just going to be a bystander in this one for now. Burlington. So this was another one of the retail names, like a strong retail name that really broke down. This one I think is recovering. So again, another late day call buyer that came in on Friday. You could see it's flirting with trying to get back into the above the 200-day moving average. So actually a nice recovery. Big hammer bar on Friday. But it looks like it's getting rejected a little bit by the 200-day moving average. So what did they do in this one? They did they went pretty short dated. They did the July, so they were looking for a pretty quick bounce in this one. So again, I did not take this trade either. However, um, you know, not every trade. I try to include trades that, not just the ones that I take, but things that look interesting to me. Something that's been pretty strong that, you know, I think pretty oversold. Look at the RSI on this thing. So some people are like a 1-day bounce trader, right? Um, I do a little bit of that, not a ton of that, but I guess if you took this trade late on Friday, you're probably making a little bit of money on it. So next, what's your opinion about Disney? So I got into a Disney trade. Let's go ahead and look at the chart. I played Disney on this first bounce. So again, another trade that I was really disciplined. I got in. We saw a little bit of call activity. I think on this day here. Let me zoom in. And I made a little money on this day, and I think I took a couple targets for in this one. This was a name that I wasn't feeling very confident in, and then I took the trade off here. Now it's come back in, so I'm glad I did that. It just wasn't giving. It wasn't moving with enough. Either this day or this day. Maybe I gave it one more day, and I got out of it. I was only in this trade for a couple days, so now it's kind of come all the way back into the 200-day moving average. A lot of volume on Friday that could have been attributable to the Russell rebalance. Don't know. I think if you want to give it I mean, I don't know. I'm not seeing a ton of option. I would really need to see big buying in it. There were some puts I think that went up today. Let's look to see if anything really aggressive. There was a August 105 call buyer on Friday. There were some puts that went up mid market. So it's on. I would say put it on your watch list. I think if you want to give it a shot, versus as long as you're disciplined, the 200-day moving average, you could certainly do it. Um, I don't know. I have a bad feeling about Disney. I do. So it broke on Friday. So it is coming back here nicely. But yeah, I mean, it's a pretty it's a pretty easy setup too, right? You've got a name that's been in. Let me zoom out. Kind of choppy, break of the 200-day moving average. We saw a lot of call buying in here a couple months ago, and this thing really ran. So it's gone from 115 to 105. You've got your defined support, so it would make sense to maybe give it a shot. I would really like to see somebody aggressively purchase some calls. That would probably push me into a trade in Disney. But I like that it's an easy exit. If it doesn't work, you get right out below the 200-day moving average, with a small loss. Yeah, I'm in it. I'm in VRX. I actually got in VRX, excuse me, before the call activity. So I do manage a trend portfolio as well. I don't have a big position in it. I use a volatility assumption for position size, and I got in on May 25th. So this one, I bent my rules a little bit, and I'll tell you what I mean. I said I really don't want to get into positions below the 200-day moving average, but you could see I've got a stop price. Everything in here is. Why didn't this save? Everything in here is all mechanical, right? If something says no, I have a problem with this formula. So I have to fix it. But if something says no, I get out of it. So I set up my. Where did I put my stop price? I used the 100-day moving average for this one. So as long as you're defining something, right, and being disciplined. So for VRX, you're absolutely right. We've seen a lot of activity in this one. But yeah, it's now above. I love it. I love it. It's above the 200-day moving average. Right? So now what I could do, so I got into this on this break of the 100-day moving average, and I said, okay, if this thing breaks and doesn't work, I'm out. But I got lucky. It's did this thing last week. So now what I could do, which I need, and I need to do this today, is re-up my. I need to change my stop price. So now that we're above the 200-day moving average, I need to set it over here. All right, so I manage both a cash portfolio and an option portfolio, and I've been doing the cash portfolio. It's a basic, systematic trend portfolio. So everybody in in the room, in the trading room, Tribeca Trade Group, can see the, I send out alerts for both option trades and cash trades. And every every alert that I send out, you could actually see. If you don't believe me, what did I bought last week? Every trade that I go into, I'm setting a hard stop. My stop is 1.5 ATRs below the 200-day moving average in THC. I don't think this one's working yet. I haven't been stopped out yet. It's actually hanging in there today. So my stop is not the 200-day moving average, but 1.5 average true range below. That's my limit. So if it happens to hit there, I'm out. Or gets to that level, no questions asked. Oh, thank you. Yeah, and that's basically taking the emotion out of it and not saying, "Oh, geez," not letting your ego get offended. I said this in the beginning. I have more confidence in what I've put together here than in any one particular trade, right? And you can see some of these, you know, fold is working out really well. On just a $3,000 investment, I'm up $1,000 in it. All right, so I think we kind of covered. We went through over an hour. I'm not going to pour through each one of these. I will tell you. I'll give you I'll tell you some of the other ones that I looked at. The solar names. I am long one of the solar names for solar in cash. That's also on this spreadsheet. So I got into First Solar on May 5th. So I've been riding this one. We talked. One of the questions before I think Peter asked was, "What are you doing for targets?" No targets in my cash portfolio. Ride the trend as long as it goes until you get stopped. So I do move up my stop prices for the moving averages. So just like I talked about for VRX, again, very mechanical. In cash trades, let them go. If they hit your stop price, get out of them. And then I also put Micron on here. ILG, HRL. So I've got a consumer staple. What's HRL doing today? Down a little bit. So this was a pretty short dated trade. Looks like it's having a little bit of trouble with that resistance, both up here and the 200-day moving average. Thoughts on? I think we just saw some call buying a little while ago in Marriott. These were August. Well, it looks like I might get stopped out in Broadcom already. I just got an alert 241. It looks like we're getting a little volatility coming in again into semis. So Marriott, there was some August 105 calls that went up. These hotel names have been really, really strong. We've been seeing a whole lot of activity in a bunch of these names. I actually set up my own customized index to watch the strength in this group because there's no ETF. So I've got a lodging index. And you can see how strong this whole group is. It's really strong. There's been various different call buyers in different names. What did I do with it? You could see weightings mode. So these are all I think Marriott's in here. I got ILG in here as well. Wyndham, which we've been seeing call activity. We saw a call buyer, I believe, about a week ago as well in Hyatt. But again, if you go to the chart in this group, my goodness, how strong this group is. This is an equally weighted basket too. So they're all doing it, not just one. But man, are they strong. So Marriott, let's look at the chart. Sure, it's going to probably look the same. You got support of the 50-day moving average. You also have some resistance. So I would like this a little bit more if it got above 105.40. All right, so that's it. So I will tell you if you guys like what you guys have seen today. Here's our special. I like to give everybody half off the first month. So $69 for the first month, so you can kind of check us out. I There's basically two platforms just to kind of give you. Sure, yeah, web's in our trading room. Um, so I've adopted Slack. Slack is, I think, one of the best platforms out there for chat. You could kind of customize. You can see everybody's got a picture by their name. And you've got all these different channels where I can post things. So as I'm doing research at night, so one of the benefits you get as a member is, you know, Pat, myself, we do all kinds of research at night, and we post charts and setups as we're going along. Like I give everybody the Barron's Roundup on the weekend, talk about what names I highlighted so you don't have to read the whole damn Barron's. And then I put in charts where just as I'm going through, I give people levels and areas where what I think are interesting. Like I talked about, so I kind of like Japan here. This is a long-term chart of Japan. Oops. And then you could see this recent, oops, it's not the right chart. Here it is. You can see all this call buy, this not call buying, inflows last week going into Japan last week. So kind of looks pretty interesting to me. Keep in mind you'll be long the yen with that trade, but I haven't put anything on yet in EWJ. But you could kind of see it's on this chart. You can see kind of almost like a flagpole or a pennant pole. So it needs to hold this for this to be a true pennant. So I'm watching it. All right, so that's it. That's our special. You could visit tribecatradegroup.com products. I'll throw this in here. So I think I can do. And would love to see you guys check out what we do. I basically I work for the subscribers, right? Our trading room. It's not about me. It's not about Pat. It's about helping you guys and trying to make money together. Um, as a group. And most of the traders, it's a big team. It's kind of like a trading desk, which is why I started Tribeca Trade Group a little over a year ago. One of my favorite things about trading is having a trading desk. So, we've got an electronic, basic trading desk where everybody does something a little bit different. We've got some guys who are really good at biotech. We've got some guys who are really good at day trading, and so we've got something for everybody. I think so. I think so, Peter. I think we can send text alerts. And if not, you can set alerts. I post everything in here, and you could actually on your phone, you could use the mobile app, and you can turn on alerts so that you get a pop-up every time I enter a trade in here. So you can actually do away with the text alerts and have this on your phone and have it turned on. Each channel has alerts. You just have to make sure that your alerts are on. So every time I get into a trade, if you're a part-time trader or away from the desk, like, oh, boom, you just got into, Broadcom and it's already losing money. so, so that's how it works. All right, everybody. Thanks for joining me today. What do we go? An hour and 15 minutes. Not that bad. I always end up going longer than expected. So thanks for joining me, and I'll send out the recording probably later tonight if you missed any part of the presentation. Thanks again. Enjoy the rest of your day.